Hey Chris, can you guys hear me okay? You guys can either chat in the I'd probably prefer the Slack channel if you can to let me know. Can you guys hear this okay? Is volume better now? Is this a little bit better? I can turn it up. I don't want to blow your guys' ears out. All right. Well, I'll go ahead and start. I don't know how many more other people are going to come in, but so I was talking to Chris a little bit last night, and we were going over some of the strategies I use for Bitmex trading. I know he had some questions we're going to answer. Just so you guys know, I've been in crypto for a couple of years now, and honestly, I haven't been trading too hardcore for all those 2 years. I really just started investing a couple of years ago. Um, but I have found it to be pretty lucrative. I don't know if you guys have been here for a while, um, but if you're not familiar with Bitmex, there's a strong correlation between Bitcoin and altcoins, and that's mainly that when Bitcoin moves, the altcoins start to pretty much drop out. So if Bitcoin goes up, alts drop. Bitcoin goes down, alts drop. If it's within a 5% movement, though, the altcoins seem to move pretty well, or at least the altcoins that people are getting into. So I like altcoin investing. That's probably my favorite thing to look at and research and get into. Beyond that, here, one second. All right, sorry about that. No, it didn't cut. It didn't cut. My son was freaking out a little bit, so I have little ones, by the way. So uh, where was I? Yeah. So altcoins. When Bitcoin's going through some big movements, the altcoins will suffer, and especially after the last month we had, you're going to see um, a lot more alt tearing once these moves become official. So this is Bitcoin on the daily. I drew some charts here so I didn't have to redraw them. But whenever there's a big move like these moves that you see here, can you guys hear me okay? Just confirm. You guys can confirm in either chat that I prefer on Slack if you guys can tell me it's going okay. Yeah, I might have a slow connection here. Gotta love Sundays in the Midwest. Okay, good. All right. So these big drops here, during these big drops, you can look that correlated with the altcoin markets, and it just absolutely devastates them, right? I mean, people sell out of them. It's not a good thing. Okay, so when we anticipate these big moves, we know to exit the altcoin markets, or obviously don't invest into them because there's a good chance they're going to start dropping. There's two reasons that happens, and there's two reasons it starts to happen. One, there is a bot for every single exchange. So GDAX, Binance, Bittrex, Bitfinex, all the exchanges that we use, there is a bot that manages the leftover alts that are generated from people trading. So every single time you trade, buy an altcoin or sell one, the exchange itself takes a cut, right? And when Bitcoin moves plus or minus around 5%, it sells off those alts. So that's why when you see Bitcoin jump a certain way, it's pretty simple to assume that people are selling their alts, which does happen. But what happens first is the bot will start shedding alts to keep up with Bitcoin. It wants to hold on to Bitcoin. So it's smart to keep that in mind because that can do all sorts of things. When it sells it off, it can trigger stop losses and make people panic, and then they start selling off their altcoins. So that's really what happens when the market moves. You really can't avoid it. I think as more alts move away towards being pegged to Bitcoin, it may happen less, but because Bitcoin is still king, it's going to keep happening over and over again. I mean, Bitcoin's king. When outside investors who haven't gotten into the crypto space measure the healthiness of the crypto market, they're measuring Bitcoin. That's what they see. That's what they know. Nobody has any idea what the hell, BNB coin is, right? They have no clue. It's a pretty big coin. It's got a decently sized market cap. But if you talk to the average investor, they have no idea what a BNB coin is. But if you tell them what Bitcoin is, there's probably a 50-50 chance they're going to know what it is. They've at least heard of it, right? So that's why it's so important to always measure the health of Bitcoin. During this example, at least for what we're going to be talking about, Bitcoin itself is going through some more movements, right? So we had this top movement up here just around 20K. And over the last couple months, we've been slowly declining, right? This was our dead cat bounce, down again, another dead cat, down again, and now we're returning to the mean. And if you look here, there's this trend line that was created up here, and that moved, right? I won't draw on it because it's not really relevant to what we're going to be talking about today. But now we're getting into this, right? Because at least on the daily, this trend line that was created we're nearing breaking out of that. Okay, you guys see that? So this is what everybody's talking about. We can look at it different time frames. We can squeeze the price here, make it look more dramatic than it really is. But the reality is we have two options here. We can either break out of this falling wedge here and go up through this itchy cloud, or we can break down further. And a lot of people are talking about a breakdown here towards this triangle, this wedge. So there's two ways I like to look at the Bitcoin price. There's the daily, and then there's the hourly, right? So let's see if I can do this. The hourly gives me an idea of what's happening for Bitmex trading. And I know that's what we want to cover today. So if you look here, when you draw these charts, pretty much the rules of traditional charting is you find 2 points where the lines touch. Traditional charting will tell you need to have 3 or more points touching. But for crypto, it's a little bit different, okay? And I use Elliott wave theory when we're talking about how we're charting Bitcoin. And standard Elliott wave theory, I think Chris has stickied that to some of the resources in another channel. Elliott wave theory tells you that any wave starts after the end of a downturn. So we find our peak point here, right? We find our peak point here. This drop wave is going to be A, right? And then we go up to B and then C. The biggest rule here being that C always has to be longer than B. And it can be usually longer than A as well. At this point, it's a little bit longer. Now, within these waves, there's also subwaves. So, you can count it also A, B, C, and then this other wave continues to be D, E, F, G. I mean, that can extend for a while, right? It's considered an extended market cycle, right? But for our purposes, at least just for measuring where we're at, we're going to use this standard charting, okay? So following this rundown, this retracement wave, following C usually, you're going to see an impulse wave, which would be 1. So this would be the 1 impulse wave, then a retrace to 2. Now, you can, again, the same thing, you can do the exact same thing, consider that 1, 2, 3, right? But then it breaks down again. So that tells us that this isn't really even a true Elliott wave, but you can still use it to measure what's happening, right? And you can use these confines of this trend. Now, one thing to keep in mind is if there's a lot of price manipulation going on, there are whales or people with a lot of Bitcoin that can manipulate the price and drive it either down below or up above outside of wave theory, okay? But we'll use this as a general market measure to see where we're going, right? Now, why this matters? Well, if we think that this is going to continue on this downtrend, right? And if we look at a macro, we can look into things like inverted head and shoulders and things like that and what happens with them. But there's been a lot of talk on Twitter talking about what's going to happen, right? And right now we're really undecided. We don't know. Well, we can use this to measure and figure out where we're going to put our bets in. So I believe Chris and I, where do we start at, Chris? Like here? Around here, maybe? We were shorting pretty much at the tops here and writing it all down. Okay. Is it safe? I mean, everybody else is using this exact same charting measure, right? But you could bet that within a certain realm of accuracy, you're going to be correct, right? All you know is that once you draw these lines, this price is staying within here. It's not moving too much. And you can see that it's slowly squeezing down in this descending wedge. Now, what I also drew here was a line of contention here. This 9,300, see this red line right here? This line has been kind of an area that it's been holding up pretty well. It was kind of a line of contention over here. It took a while for us to break there, and it kind of kept us below 10K. And you can see this big spike that actually, I don't know if you can see this over here, and this was back in February. This big line, we battled for a minute here, and then we needed a lot of volume to push up above it, right? And it actually, if you go back here even further, February again, it was a resistance level. Go back even further, it becomes a support level, beginning of January. And you go back even further, and the exact same thing happens. You see a lot of contention over here back in November to get above this level before we skyrocketed up to 20K. So this line, this price level is relevant. It's kind of a big deal. If we break below this, right, I would expect us to see a pretty big free fall. Now, keep in mind that this is a global market. So although for our purposes we measure things in USD, people measure prices in gold British pounds, Japanese won. I mean, there's tons of different ways you can measure the price of Bitcoin. So the charts will look differently. For my purposes, it matters that I'm looking at the price of Bitcoin in US dollars. Okay. So if I'm going to be trading this, okay, and this is Bitmex, by the way. I probably should have started to preface that a little bit. This is Bitmex, right? What's really happening here at Bitmex is that exact same trend line we were looking at before. This is under the 30 minute. All you're doing, hey, Chris, do you think I should go over like what do I need to go like all the way basic to cover like what's a buy, what's a sell? Should I cover that, or I'll wait for your answer on this one. I'm sure we'll have a delay here. You there, Chris? All right, well, I'll cover it anyway, okay? So, yeah. So, Bitmex is an option trading platform, okay? What you do is your quantity, these are called contracts because it's kind of like using US dollars, the US dollar amount, okay? And you can use leverage to measure your trades here, okay? So, the more leverage you use, the less actual USD you'll need. It will take a smaller percentage of your total bid, right? On the upside, though, on the other side of that, if you use more leverage, your liquidation price is very smaller. Your area for failure is very small. So you essentially place a bet or a contract or a buy, right? If you want to go long, if you think this is going to go up from the point it's at, if you think this is going to go up from this point up to here, we would put a long here at 93.65, and we would hope that this price goes up. Now, your profit margin it varies depending on how much you're betting and what leverage you're using. So 1,700 contracts would be $1,700, but that would be at 25x, right? What you're really looking at here is where it shows cost. So I would put under cost, I would watch that and see how much I actually have. In this case, what I do is I take some profit and I move it out, kind of treat it like a little profit-making area here where I can just pull out more Bitcoin as I make more. So you have to see how much your available balance is and how much your order value is for every price amount you put here. So if we made this like 4,000 contracts, at this leverage, 25x, it's saying that's going to cost us 0.177. And XBT just means Bitcoin, okay? It's just like the trading value for Bitcoin. And they're pretty equal, right? So if I were to move this up, if I were to drop this back to 2x, do you see how my cost increases there? That means that 4,000 contracts at 2x, you'd need to use a lot more of your balance, right? And in this case, I wouldn't be able to place that bet, okay? So leverage is cool because you can play with, a lot more Bitcoin than you actually have. So in doing that, though, you have to make sure you understand what's going to happen when you place this. So what I do, when I first was learning Bitmex, I would use this little calculator up here, okay? And this calculator allows you to figure out what's going to happen if I do this trade, okay? So let's say I like using 25x leverage. People with bigger balls might enjoy a higher leverage, but when Bitcoin's very volatile, you have a bigger chance of losing all your money when you use higher leverage. So for this case, we'll say it's 25x leverage, and we're going to pretend we're going to put a long in, okay? And my entry price, we'll just make that we'll make it the current price. So 93.95, right? Okay. And then it's going to tell us that what's our return on equity at 100%. Well, actually, hold on. I'm in the wrong spot. So here, sorry, forget that. We're just looking at target price. What we really want is profit loss, okay? So let's say we're going to do 1,500 contracts, okay? All right? And we're going to do a long. And we're going to use our entry price again, 93.90, okay? And then we're going to say that if we're going to get in here, and we're looking at this downward trend here, if we were to move these, right, because this trend is squeezing a bit, I don't know if it's going to let me move it. This trend is moving here, and we think this is going to come up here and bounce off this, right? So we would actually draw a new line. It's not going to let me go here, but I'd have to go into the other thing. I don't want to mess it up right now. But let's just say for our purposes, if we're using this measurement, right? This is squeezing down. So from here to here, and this is Bitcoin again, it's just in a different time frame. This is actually squeezing like this, right? And we think this price is going to go up here and swing up, okay? It's going to swing up over here, okay? So if we think that's going to happen, it's probably going to happen at this trend line, like this. So we can assume that 95.27.9 is going to be our exit price, right, for a swing up. So we assume that our exit price is going to be 95.27, right? And if we use 25x leverage, again, 93.90, our exit price is 95.27 at 25x leverage. It tells us that we're going to make 0.0023 Bitcoin with that. So this is a good way to visualize what's happening, okay? Once you get better at this, you don't have to use this calculator, but it can give you an idea of what's going to happen as this price moves up. Because remember, all you're doing is betting on price movement. You're not actually buying and selling Bitcoin. You're just betting on how the price is going to move. The short is pretty much the inverse of it, okay? So if our entry price was 93.90 and Bitcoin went up to 95.27, it's saying, boom, you're going to lose 36.15%, okay? Now, if we were going to bet the other way and assume that Bitcoin was going to drop down to 8,000, so I'm really thinking that Bitcoin's going to scrape 8,800. So I'm going to be conservative and say 8,850. If we opened up a short here, because this is all trending down, right? This is all, this whole line right here is trending down. We think it's going to scrape here at 8,800 and then rock it up, and I'll tell you why. If we think that's going to happen, and we use 25x leverage to short it, our return on investment would be 152%, right? Or almost 0.01 Bitcoin. And that's only at 1,500. Okay. Now just keep in mind that as you drop your leverage, right, if you make this 10, that's going to affect your ROE. Okay. So that's the benefit of using leverage there. So what's happening? What have we been doing? Honestly, we use a lot of these fib retracements. Let me see if I can. I can show you guys how I did this. So for now, let's remove this. So this is our overall movement from December, right? We're back up here just under 20K. And you can see the progression down. And what we want to see is, how do we measure this? When people talk about Fibonacci, what does that mean? So Fibonacci is pretty much a golden ratio. I'm not going to get into exactly why we use that, but just know that fib retracement levels tell you what percentage of an entire move are we currently at. And this is how you use it. I mean, this was probably, when somebody showed me this, this was probably one of the most valuable things we did. So I think Chris posted a chart from my buddy Mino that showed you how to pretty much use this tool. But for our purposes, we're going to go on here and go to fib retracement. We're going to find the last lowest point of a big move. So this entire move right here is kind of one wave, right? Up here, we broke down from that wave. So either in the second wave, right? This could be wave 1 and then 2, because this broke out of this channel right here that was created down. Okay, so I'm going to start here. I'm going to measure up to that last highest point. Okay, and this shows me how much of this retracement up from this downward movement we're at. We came up to just under the 0.618 fib, right? We barely came up above that, and now we're going to retrace down the 0.786. Okay. Now, when people talk about 8,800, this is where they're getting that number from. Okay. When people think we're going to come back down and hit that 0.786 Fibonacci line, if you look, that line right there is meeting up to about 8,800. Okay, so this entire movement is probably going to come back down here and bounce up from there. That's the best outlook for TA, right? For trend analysis. And then that reversal, that would make this wave 1 off the 0.618 fib, down off of the 0.786, and then probably push us back up here to 14.5 to between, right over the 12,000 range. Now, other factors come into play. This isn't just math, otherwise everybody would be rich. This is understanding that this line right here, just above this, right about 12K, there's a lot of resistance here. You can see the lines of contention all the way across. Here, back over here, all this. That means that people bought this. That means somebody bought the price here from somebody else as they were selling down. And they've probably been bag holders for a long, long time. So as soon as they get to the break-even point, they're going to want to dump that back down so they can at least get out, right? That's how people work. When you lose money, if you hold on long enough, if you can break even, you're incredibly tempted to just get out and say, I got my money back, thank God, never touching that again, okay? That's the psychology of this. And when we talk about trend analysis, that's all it is. Trend analysis is just psychology of understanding market sentiment. Why is it doing this? Why is this moving? Why did it break down? Where is it going? Well, we can measure that through trend analysis, okay? So you can use this fib after big downward movements. We could probably use it here. Okay. And we could probably fib this out to see where we're at here from this movement, right? But for our purposes, we're going to use that bigger line at 8,800. This is why I hate this, Chris. This is why I hate drawing on the Bitmex one, because it doesn't have my tools out the way I want it. But, this line, that's that fib line. This is our target, right? So it acted as some resistance here until we finally broke up it from the 6K movement. And it's going to act as support as we bounce off of it here. So if we're going to bet on this, if we thought we were going to place some bets here, and seeing these wave patterns start forming, I don't know if it helps you guys to see it cleaner. Again, this is this entire downward movement here, right? As we're looking at this, there's some patterns here that are forming that could be bullish or bearish. Bearish means price going down. Bullish means price going up. So, for instance, this pattern right here is considered somewhat of a head and shoulders pattern. Okay, head and shoulders means bearish, means price is going down. Okay, it means it went up, came back down, went back up, and this wick on this candle, right here, that's the only thing that really even made this relevant, this push right here. So usually for a head and shoulders, it goes up, comes back down, goes back up above the previous shoulder, right? Settles back down to about an even point where the left shoulder was, then pushes back up and then drops back down. After that move happens, it means that it was 1, 2, 3 attempts at rising through that price, right? It didn't make it, so it drops. So after that drops down, we're going to bet on that, okay? Especially since we're assuming that this line, this 8,800, is a fib level. We know that Bitcoin loves Fibonacci numbers. It's probably going to break down through here. Now, keep in mind that there's plenty of traders out there that are knowing this. They're thinking this. So they want to make sure if Bitcoin's going to come down, they want to get in on the movement up, on that final push following this correction. So they're going to layer their bids here, all through here. Their bids can look like, if we think, let's do this. If we think that Bitcoin this is wave 1, wave 2, hold on, let's do this. This is wave 1, wave 2, wave 3, wave 4, and wave 5. If that's what we think is going to happen, right, we want to place our longs here, our long buys here, bounce off of this, and ride that all the way up. When you're doing Bitmex trading, you want the biggest price movement to be where you get in low and go high. That's how you get your 100%, 200% gains. So what I would do if I was going to bet on this, I know that people are assuming that this line is very important. They're looking at this line. So I would start placing bets on longs here and here and here, right? You guys see that? You can start placing your bets here. All the way down. That way you make sure that there's not somebody else buying this all up as it hits the bottom. That way you can take the ride and run it up on the third wave. Okay? Now, the higher amount of leverage you use, the smaller time frame you have to work within. Oh, I messed this all up. If you look down here, let's just put a bid here. Let's just put a small long. We'll put one for 200. Okay, 200 contracts, very small amount, just so I can show you guys. And we're going to do a 50x leverage. Okay, so we're going to make it 93.98.5 just so it fills. It's going to tell me my position, my cost at 50x. It's going to tell you the market price, the current price the market's at. All right. And then it's going to tell me my liquidation price. So this is saying that I'm going to get in at 93.99.5, and the liquidation of that price is going to be 92.60. So if that price falls to 92.60.5, I lose my entire bet. It's gone. Bye-bye. Okay? Now, if I use a smaller leverage, that should change. Okay, there we go. So that changed to 90.81. So the less leverage I use, the more room for error I have. The more the price can move up and down without me losing my money. Or in this case, if I'm longing, the more the price can move down without me losing all of my money. If the price falls to there, that amount of money you just bet, that 0.008, is gone. Bye-bye. It's out of there. Okay? So you don't want to get liquidated. Now, one thing we're going to do is I'm going to show you guys how to not get liquidated. Okay? So one thing that happens when we place this bid, let's just buy this long at 25x, okay? And we'll use the current price, 234. I'm gonna have to go a little bit higher. So here we're moving up. We're probably going to come up here and bounce off this channel again and then come back down. But for this purpose, we're going to do a long. It's going to send the order into my active orders here. And from here, I can actually edit it if I want. I can come in here, click on this, and amend it so I can adjust my pricing. Okay, look, our order filled. It's in. We can jump back over to positions, and it's telling us that we're at 25x margin. It's giving us our unrealized profit because we got in at 94.24, and the market has dropped to 94.21. Okay. the price dropped a little bit, so it's saying that, we're already in the negative, negative 0.094%. It also tells us our liquidation price right here. It's saying that if the price goes to 91.06, if it drops at this price entry, I lose all my money. Okay, I lost everything. Over here to the left, it shows us how many contracts our position are in and what our return on investment is. So current on equity, it's at 3.6. So we got in. The market price is actually at 94.28, which is higher than 94.24. So we're good. Okay, we're actually making money. And know that there is a price discrepancy between the market price and the price here, because this price is kind of a mix between GDAX and Binance data. Okay, I'm sorry, Bitmex data, and it's not loading up right now. So just understand that. And you can watch this. I watch this. I hover over here to get the actual P&L. If you look at the bottom left here, it shows you the rate cost. So another way Bitmex makes money is they lend you the Bitcoin you're using on margin, right? Because we're going 25x. So they're making up for the difference of that 25x you don't have. If you look here, your order value for 234 contracts is actually 248.0248 Bitcoin. So it costs us what? 0.001-ish Bitcoin to actually trade with 0.02 Bitcoin worth, okay? And we pay for that over the course of time. So in 2 hours or in 10 hours, that you're going to be charged this percentage right here, the predicted rate, the funding rate to borrow that Bitcoin, because they're kind of loaning it to you. And that's really what liquidation is. You're kind of taking a loan to play with the money, and if the price falls to a certain point, it's too much of a risk for them. So they cut your loan and you lose your collateral that you put forth. Another thing you can look at is on your active positions down here where it says margin. You could, if my price, if we got in at 94.24, okay, and the price started dropping, if this was like 9,300 and we know we only have 200 more to go before we hit our liquidation price, I can go here and I can add some margin. I can add like 3 margin. And then what happens is that drops our liquidation price. That gives you, that's injecting more collateral so that they don't close out or liquidate your price right away. Okay? So one thing to keep in mind is when I do this, because there's always the risk of being liquidated and I'm always trying to stay in the green, what I want to do is I want to place a bet here and then another here and another here if I think the price is going down, but I want it to go up. Okay? 1, so I don't get liquidated, and 2, because I want to average into the position. There's people that take their entire stack, they drop it into one position, and in the moment the price drops down, they're freaking out and they close it. They hit market, they market sell it, they take whatever profit, they take back their money at whatever cost it cost them right there. And they do it over and over and over again, they lose a lot of money anytime the market moves down. But if it did, and I thought for sure that we were going to move up here, right? If I thought we were going to move up here, I would wait for it to drop down to an acceptable point that I think it's going to bottom out from that movement. And then I would buy another long with 2.2 times this amount, right? So it would actually be like 45, roughly. 454 would be that original contract amount times 2.2. And the reason I do that is because from this point, this line right here, our original, down to here, this line, we lost money. Okay? This difference right here, if it moved down to this line, from here to here, we lost money. Okay? In order to make up that difference, if I'm still counting on it to move up, I'm gonna get another order right here, with double the amount of contracts of this order, this original one right here at 234. You see that? 2.2 more. So that would be 454 roughly contracts. That way I could catch that second bottom and then still take the movement up for that first wave, right? And if it still didn't do that, I could do again. As it moves down, do 2.2 that amount. So this would be 2.2, 234, right? And then if I thought it was still going to go down, if I still wanted to catch that drop, I would do 2.2, that 454, which would be, you know, like almost 1,000, right? Now, I'm not saying you always do this, but if you think that you're getting caught, if you thought it was going to go up and you got caught going down, this is how you average into it. You increase your contract amount, and you also move it down as you get it, okay? That way you can really catch the bottom, and then this skyrockets. You catch that entire movement down. Now, I'm not saying I always do that, but if I'm unsure, that's how if I'm betting like 60%, 70% sure that this is going to move up and break this channel that it's in, that's what I do. Okay? If I think this is going to come up and break out of this, I'll start grabbing it here. Okay? Now, of course, this could always break the other way, so we don't know what's going to happen, right? You want to be able to get in and out of these or add more contracts to your position to average in it, so you're not, you know, throwing all your wad into one stack. It goes down, you get liquidated. Hey, you're out of the game. You don't have anything else to play with. Okay? It'd be like walking into the casino, sitting down at the blackjack table, and taking your entire, you know, cash roll on your first hand. It just doesn't make any sense. It's not smart. The odds aren't against you. So there's another way to play this. Okay, another way to play this is to wait for the bounce here. So if we think this is going to continue down this line, okay, we're going to continue down. Once it hits here, you wait for the confirmation. You wait for this to break out above this amount. You want it to break above here, okay, the current price. You wait for this to come back up, and then you go long here. That's a pretty safe way to play. You play long there, and you play, oh, I messed this up. And you play this entire movement. Okay, now, obviously, we may not break through 12K because we talked about that line of contention back here. So we might only, you know, make it to 11.9, but that's still a nice, healthy move, right? I think we will if we break through it. That's still a nice, healthy move. And keep in mind, you're going to have subwaves in here. It's going to go up. It's going to go down, up, down, up, down. It's going to look crazy all the way up. It's going to do this. Price is going to do this all the way up. Okay. You can play all of these waves if you want. You can have a long here and just sit back and wait, or you can play this wave, go up, short it, up, short it. We can get into that later. It's a little bit more hard, but I mean, at this kind of point, you can put a lot of leverage, put a nice, decent sized contract here and catch it up, and then add more when it dips down into these smaller pieces. Okay. At 4, I sell. Okay. But once it hits the top here, which I think is going to be around 12K, I'll probably sell this. I'll sell right here, put a small short, ride wave 4 down, because remember, these are big waves. Ride wave 4 down, and wave 5 is much smaller. Okay, see the price difference between 3 and 5? This is like one last push here. Okay, it could go crazy, who knows? But I will sell here, and then maybe do a small short, and then get out. Because after this, the market cycle completes, and we get an ABC. Okay? And you can short that. So I get out, I wait for the fifth wave, I get back in here, and then we short all this. We short the whole thing. Boom. Short it all. Some people even add more contracts here at B to take this final C wave, because C is going to be long like the third wave. Okay? Let's see. Chris, where did you ask those questions at? Here we go. Okay, so what is your strategy for profit taking? Yeah, so I think I explained that. You know, what we've been doing here, I will probably ride every one of these waves. Take profit. Boom, down, take profit. Once I can draw more channels here through this movement, once I can draw more channels on the upward movement, I will take profit at each wave. That's how you make real money. Because if this wave 3 is gonna be a long, and if this is gonna be a long wave, okay, you're paying for the funding, you know, could be a week. You're paying for all that funding over time because you're playing with borrowed money on the margin. Okay, so you have to take into account that it's going to cost you. So you're almost better off playing every single wave. You know, I shorted here, I longed here, I shorted here, right? You can make a lot of money doing that over and over again. Now, the reason we do this, guys, is because right now the alt market's unpredictable. Once Bitcoin makes this big move and finishes wave 5, the fifth wave on that, once we get into this ABC, okay, this ABC correction, this is alt party. This is Bitcoin settling into a channel and correcting for a while, assuming there's high demand, because once it breaks above 12K, FOMO is going to stick. Once it breaks above here, once it gets above here and breaks this trend down, let me clean this up. I can't stand this. I knew it was a bad idea. So this trend, once that gets broken, man, my mouse is bugging out. Once we break above this trend line, FOMO is going to sit out. Once we go above here, people are going to be thinking about this up here. They're going to be thinking about 20K Bitcoin again. Means we've had a solid reversal. They want in to all this. Okay. Now, do we have a possibility that this is just the final wave of movement down and we're going to break down lower? Yeah, absolutely. In that case, if we break below, you know, this support line here, if we break below here, we can short all of it. Now the problem becomes, if we short below that, you get a bunch of Bitcoin, you know, how much is it going to be worth? So, you know, at the end of the day, you're still using your Bitcoin to make money. Okay, you want me to jump back to here for TA. Okay, good idea. So, this is similar to what we were looking at over there. This is on the 1 hour. Obviously, this looks more like this. I was playing with some stuff. All right. So this looks pretty busy. We're just showing the same trend lines, this descending wedge. Okay. And you can see as we change the daily, from the daily to the 3 hour, 4 hour, as we change those parameters, you see this cloud. I should clean this up. Actually, let's take everything but the itchy cloud off. This cloud, this is the Ichimoku cloud. I'm not going to go into what it is. You can read about it. I think we posted the PDF on it. This acts as a support. As long as this holds, this should support us. Now, obviously, if some market maker comes and just sells off all their Bitcoin again, we're going to break down through it. But this acts as support. This is historical support where people are still buying Bitcoin, and it shows a trend behind what it is. And you can see as the cloud turns red, that's where we were sitting underneath it, right? Pushed it down, we broke through the cloud here, and now we're sitting above it as this area is green here. Okay, so that's just some of the Bitmex stuff. I don't want to make this too long, but I want to show you one more thing. I don't pay for TradingView. So I use another site called CryptoWatch to do some of my trading. And this lets me know exactly when to get in after I've done my trend analysis and get an idea of where we're heading. I use this. This is Bitcoin again. It's on a 5-minute scale. And I can jump back and forth between 5 minutes and 15 minutes. And it tells me what's happening. Now, there are three main indicators, actually 2 main indicators that I use that are down here. Over here is the MACD, okay? And underneath is the MFI. Now, the MACD is kind of a volume trend. It uses the moving averages here, different types of moving averages, and it tells us what's happening with the price and what trends it's moving into. Usually, when the price bottoms out down here, like over here, you see a trend reversal, and it shoots up in the price, okay? Sometimes when you see a cross here between the 2 EMAs here, you'll see another trend reversal down, and I'll get into that in a second. The MFI is the money flow indicator, and it's telling us how much money is actually how much Bitcoin is actually being bought above the average price. So understand that the technicals behind Bitcoin is Bitcoin only rises in price. It only goes up if people are willing to pay higher than the person before them. That's what moves this price up. So, if you see that there's a trend downward, you're probably thinking, I want to buy some Bitcoin, but I don't want to pay more than the person that just bought it because it's going down. Okay? Same thing here. At this point, this entire move, people were willing to buy Bitcoin because there was FOMO. There was fear of missing out on buying some. They thought it was going to go through the moon. I want some. I want some Bitcoin. Okay? That's what actually moves the price up. Okay? Which is why people say sometimes if price isn't moving up, it's bound to just go back down. That's why volume is such a big indicator. If there's no volume, if there's no people buying it, the price is not going to be held up. It's just going to keep going down. Okay? All right, where was I? Okay, so back to CryptoWatch. So these are the main indicators I use: the MACD and the MFI. So MFI is down here, MACD is here. And what you can see here, the reason I use CryptoWatch is because I can't get this same indicator for free at TradingView. And what you're looking at here, you can see that when it's a downtrend, these bars turn red, and when it's a strong downtrend, you see hollow bars. See how they're hollow there? That says it's a nice, solid downward trend. There's strength behind the sales. And then when it starts to go full, it means it's reversing. It's not as strong as the previous one. It's weak. So it turns solid when it's going back up. Okay? You use this in conjunction with the MFI to know where money is, to see if people are buying into Bitcoin. When it bottoms out, there's not a lot of people buying. When both of these indicators line up together, okay, it gives you a strong buy signal along with the candle. This is a very bullish candle. You have contention here. There were some sells here, but we had more buys than we had sells, and it was higher than the previous candle before it. So it's bullish. That's an indicator that you should look down. Look, we have a solid candle after a previous hollow candle, and MFI is bottoming out down here around 27. That is a bullish signal. You buy. You put in a long buy here. You write it up. Okay? Again, you look for your indicators. The volume's getting smaller on your sell volume. It's turning solid and smaller. Boom, you're going to get a trend reversal. Okay? You know that you could probably get that last candle. You put your sell here, especially with a very, very bullish doji. Bearish doji. And you follow it through. You know, you don't, this right here was your reversal. You sell it. And then you short. You know that this is going to be green volume. It might freak you out a little bit, but as long as you're not going to get liquidated between here, you should be fine. Okay? You see that's still low buy volume. This doji kind of freaks you out a little bit because that's actually a somewhat bullish doji, meaning we're going to go back up, but it's still low volume. You look down at the MFI, it hasn't peaked out yet. It's still below 70. So you continue the short, keep going. You look down at your MACD, still solid. Right about here, you see this contention doji right here, it's going green. Okay, you sell. You sell here, this is stagnant. These two are getting pretty close together. This is where you sell, right in here. But you shorted from 97.28 probably down to 94.71. And you don't get greedy, okay? You don't, if you're gonna always go for 100% return on your 100% profit on every move you do, you're gonna lose a lot of money because you're not taking profits when you should. This isn't a lottery ticket. This is math. This is using trends, reading trends, understanding when you get out and get in. And you know, sometimes here you see a reversal, but there's no indication here that we've bottomed out very low. So we're kind of in the middle on the MFI. We're right about 50. So there's not a lot of movement here. And so we went sideways. That doesn't mean you have to trade every single wave. Okay? You don't have to do that. You can wait to get a good signal again. You know, here, the MACD again is still moving down. You could probably short this entire piece because the MACD is not really coming back up too high. Short this all the way down. Boom. We get here, the MACD is bottoming out. We go from hollow to full on the volume. MFI is getting low. People are going to start buying again. Once you see this start turning green, you exit your short. And you could have shorted that entire movement. Okay? Because your short started up here, all the way down. Again, you're looking at $500 price swing here. Okay? That right there, just shorting, long, short, would have made you more money than just putting a short here and writing this all the way down to here. Okay, that's what I do to read some of this. I don't know if you guys had any more questions or who's still. I haven't even checked to see who's still on the channel. Let's see. I want to answer the rest of your questions here, Chris, to make sure I cover them all. What was the other one? Where were those questions at? I'm like scrolling past all of our music posters here. Okay, here we go. Can you go over having both a long and short in at the same time? Okay, so if you were to put a long, if you were to put a long here and write it up on Bitmex, oh crap, I forgot I put in that short. Oh well. So if you were going to put a long here, so yeah, look, we lost like 0.0001. If we were going to put in a short here or a long here because we went a short here for that same amount, it would just cancel it out. Okay. Now, what some people do is they use two Bitmex accounts. It's a little bit more advanced, so they can get both sides of the trading, right? One account they use for like longer. They'll do a one long short and long the entire motion. The other one they'll do the waves up and down. So just know that if I put a short for the same amount, it'll just cancel out. It'll cancel it. It seemed like it was, yeah, that's exact. It's subtracting your buy contracts from sell contracts. That's exactly what it's doing. Now, if it's the amount of sell contracts, you know, you will be essentially closing your short and going long, or vice versa. Any important UI setup we should have in Bitmex? I mean, I don't like how small this chart is, even with my decently sized screen. I don't like it. I'll use it, you know, on a smaller time frame. This usually isn't in the 1 hour time frame. This is usually at like the 15-minute. So I'm in close here, figuring out what's happening. Okay. It's a smaller time frame. I use the bigger time frame to figure out what the movement is and at what price am I expecting this to bounce up or down. Okay. And it's okay, guys, to sit out on some of the waves. That's fine. You know, we're heading towards an area of contention now where we don't know what's going to happen. We have no clue. So, you know, it might be better just to wait for to see which way it's breaking and then ride that up and down instead of you put a long too early, price dumps, and, you know, not only do you not have the Bitcoin you had before, but, you know, Bitcoin's dumping and it's going to be $10 now or something. Okay. Example of a stop loss for a short and a stop loss for a long. Okay. So, for this order, okay, we're going to create a stop loss. Okay. So essentially what we're going to do is we're going to create a trigger to close this out. Okay. So if we have the same amount of contracts, which is 234, okay, and we think that if this goes any lower, we want to close it. Okay. And it's going to be before our liquidation price. So our trigger is going to be the limit price. Okay. And we're worried that this is going to go, you know, 93.24, for example. Okay. And we're going to make our trigger price, and I always tell people to make this lower. Okay. You're going to make this probably 93.18. Okay. That way, it gives, what happens a lot is people set these stop losses or the triggers, and the trigger and the actual stop price is too close together, and it moves too quickly for the system to trigger it and actually sell what you had. Okay. So we're going to do a sell stop. Okay. I'm sorry. Actually, let's do a trailing stop because these are more fun. You can use a trailing. No, that's going to be too long. Okay. So we're going to do a stop limit order here for this. The stop price is 93.18. The limit price is just below here. So if it hits that price, it's going to trigger it. you sell the stop loss at that position. It says this stop order is being submitted with the close on trigger instruction. Close orders can only reduce your position, not increase it. Okay. If the account has insufficient available balance when the close order is triggered, then other orders will be canceled or amended down. So that's what we want, right? We want to sell that out from here to cancel it. So we put that in. Our stop is there, and it's telling us what our triggering price is. Okay. Does that make sense? It's a little confusing. I don't use a ton of them, mainly because I don't feel comfortable doing Bitmex trading and not being in front of the screen. I think it's too risky. Okay. And you want a take profit. Okay. So I'm trying to see. Well, this is one of those things. If you wanted me to do the other one, the stop loss for or the stop limit, the profit limit, we'd have to wait for the price to go back up. So essentially, the take profit limit is going to be your prices. You're underneath your price, okay, and you're trying to sell it off. I'm sorry, you're above your price, and you're going to come down on top of it and take your profit out, if that makes sense. So this would be a buy. Okay. You're going to come down, take your profit, and it's going to go back up. Okay. What other questions do you have? Holy shit, it's already been like an hour. Anything else? Any other questions, comments, concerns? Ask them now. Oh man, this long is hurting. You guys got anything else? Because I'll close it down so I get back to figuring out. Honestly, I'll tell you, I really think, we're really hitting this. This 9,300 level, we're just hammering that over and over again. We're going to break down. Remember what I told you about the rule of threes? We hit it here, we're hitting it here, we came up and we're hitting it again. I would bet that within another fourth touch, we're going to break down here. So I'm going to close this. I'm going to market close this position at a loss. And I think once I see a little bit of up movement, I'm going to put in a short here. And we're going to come down. So yeah. All right. If you guys don't have any more questions, maybe we can do this again and go over some of the alt trading once alt season comes in. We could probably spend hours on that, but we've already been doing this for an hour. So hope it was helpful, guys. As always, ask Chris or me if you guys have any questions, and we'll keep posting updates as we get them. All right, guys, take care.